Knowledge is power. Make an impact by learning more. Call us right now for more help at 866-945-8070. Factoring receivables in QuickBooks Online. So we're looking at an accounts receivable aging detail, all based on some invoices that were posted on March 1st, and all of which we've sold to our factor. So we want to get this recorded. And as I mentioned in the write-up, the temptation is going to be to receive payments on these invoices, but that's not the correct thing to do because these invoices haven't actually been paid yet. The clients still owe you the money, so you definitely want to keep it on record in your accounting that the clients still owe you this money. And consider especially if your factor has recourse, meaning they can force you to buy the invoice back if it doesn't get collected in a certain period of time, then the client will definitely still owe you the money. So the bottom line is, this doesn't mean these invoices are paid. In fact, it makes the accounting very simple because all it means is that you've been loaned money by the factor. Granted, these invoices kind of sit behind that loan as the basis for how the loan amount is arrived at and so on. And this will make sense, A, if you've read the write-up, and B, as I show you how we do, in fact, record this part of the transaction. So at this point, you should have a report back from your factor that looks something like this. Granted, this is somewhat simplified, but essentially you need to be able to get this much information out of your factor. They should itemize it by invoice number. And sorry, I'm in the wrong tab here. Let's stick with the purchase advance. This is the first part. So these are all the same invoices. Notice they total the $30,097.09. Notice that's my total here, right? That should be the first thing you check, is compare the invoices that are listed on the factor's report with the invoices that you in fact sold. Make sure that much agrees to start with. Then make sure you have this much information. They usually will list your customer. They will list your invoice number that you sent to your customer, the invoice date. The due date doesn't really matter that much if that's there, but it's ideal just so you have all the information about each invoice in this report, right? Most importantly, we need the gross amount of each invoice itemized by invoice number so we know exactly what they're funding you for, right? There's going to be a reserve amount taken. We're using the assumption here that they take out 20%. Right? And you're going to see later the assumption on the factor fee is that the fee is 10%, meaning they're still going to owe you some money back once these invoices are paid. And that's typically how they do it. They reserve more than the amount that covers their fee in case they aren't able to collect, or in case you wind up, their position is they don't want to wind up with a situation where you owe them more money and they have to collect it from you. That's kind of the idea. So it's almost like a security deposit they force you to keep with them. And oftentimes they'll maintain that kind of ratio so that as invoices are collected and more invoices are sold to them, they want the total reserve account to be something, let's say using this example, in the range of 10% of whatever you have outstanding with them. So as long as we have this information, then we can record the transaction very easily. We're going to go into QuickBooks and we're simply going to record a deposit. Nothing paid on these invoices, right? So we're just going to go into the Quick Create and say bank deposit. Now what I do suggest is that you do itemize it by invoice number, because that creates a good audit trail for reconciling information that's in your QuickBooks company with information that the factors provide you with after the fact. So no receive from necessary. The account is going to be loan payable, right? They're giving you money, it's a loan, so it's a loan payable. So we're going to say, we'll call it factor loan payable just so it's really clear. And I'll add that in because if you're doing this for the first time, you're going to need to. Okay, and this is going to be an other current liability. And in the detail type, because you're required to put something here, just make it also other current liabilities. Double check the name. Sometimes in QuickBooks Online, when you change the detail type, it renames the account. So make sure that's still intact. And let's say save and close. And we want to list the amount of each invoice separately here, all of them going to the loan payable, but this way we can be detailed in our description. So I have invoice number 1244 for Barry Allen. And the amount of that invoice is the full amount, the amount of that loan rather, is the full amount of the invoice. The difference is going to go to the reserve. Okay, next line you can copy that over. And we're going to say invoice number 1247. And again, full amount of the invoice. Next one is invoice 1245. Full amount of the invoice. Next is 1241. Again, full amount of the invoice. Almost there. Copy that down. Invoice number 1248. Full amount. $12.43. Now the reserve you don't have to itemize, but first check that we've got the right total, $30,097.09, right? The difference, the whole amount goes to reserve. I don't think you need to itemize the reserve by amount, but you certainly can. It will show up nicely in your reserve account actually if you do. But for now and in the interest of time, I'm just going to book this full amount to the reserve. So we're just going to call this factor reserve account. This is a receivable. This means they owe you the money. It's money they aren't giving you against those invoices. They're holding on to it, as I said earlier, as kind of a security deposit. So for the account type, when we're creating this, it's going to be other current assets. And the same with the detail type, goes to other current assets, factor reserve account, save and close. And this is going to be, what you could do actually is you could just list all the invoices at once in the memo. Invoice numbers 1244, 1247, 1245, 1241, 1248, and 1243. And of course the amount's going to be negative, right? So we're going to take this 601942 as a negative number. And that should bring us to the correct net amount, 24,077.67. 24,077.67. Of course, before you save this, make sure this in fact agrees to what you received in your bank account, and it should also agree to the total in their report, right? So as long as all of that agrees, then we can say save and close, and we're done with the first part. Now, factors, as I said earlier, have been getting better and better about giving you the right reports that make it easy to do this and easy to follow, and also keeping the transaction type separate. And by transaction types, I mean they will keep in a separate report and a separate funding loans that they've made to you based on invoices that you've sold to them, versus settlements where money has come in. See, years ago I used to see reports that had it all mixed together, and it just made it very difficult to follow. But like I said, factoring companies have gotten much, much better about their reporting, and I think part of that has also included being much better about the way they fund. So they keep things separate. They keep the sale of the invoices in one transaction and any settlements based on invoice payments they've received in a separate transaction. So this is a good place to stop. If you have something like this to record, stop and go record it. Go and take your first report from the factor for the first group of invoices that you've sold them, and make sure that you can get this far. Make sure that, first of all, that you can get a report that it may not look like this. It may look a little more complicated than this. Honestly, most of them will, but you should be able to pull this information out of it if it's not laid out quite as clearly as this. And if you don't have a report like this, then ask them for it. They'll usually be able to produce it for you. And honestly, if they can't produce a report that gives you this kind of information based on the transaction, then I would strongly consider finding another factor. All right. Anyway, make sure you can get this part done before you move on to the next part, because if you can't get this part straight, the next part's going to become infinitely more confusing because it's more complicated. Not much more, but more complicated nonetheless. So pause the video if you have to, get caught up, and then resume the video, and we'll walk through the second transaction, which is when your invoices have been paid, or some of them have been paid. Okay, so now let's get paid. Let's say it's a month later, and not all, but some of these invoices have been paid. Tony, Barry, and Diana have come in, and they've paid their invoices. Now it's time to receive payment. And we're going to receive payment on the full amount of the invoice, right? The invoice amount here is what we receive payment on. So again, you should have a report from your factor that gives you this information. It may not be quite laid out quite this clearly, although ideally it would be. There are companies I've seen where it certainly is. The bottom line is you should be able to get this information out of the report they send you in whatever report it is, whatever they call it, when they're notifying you that invoices have funded and they have now, settled those invoices and, either paid you any difference, or in some cases they may put the whole net amount into the reserve just to, again, balance that ratio out that I was referring to earlier, where they need to maintain the reserve at a certain percentage of what you have outstanding with them. So pay attention to the report too. It may not mean that you got this money. It may mean that it's going into the reserve account. And we'll cover at the end of this, the situation where they put this into the reserve and then they release another amount, something smaller, maybe something greater. Maybe now you have more in the reserve than what they need to keep to maintain that ratio. So some factors will take the net amount on a settlement, stick it into the reserve first, and then in a separate transaction fund you an amount out of the reserve that keeps them at that ratio that they're trying to maintain. So the first thing is to receive the payments, and even though this is not what you receive, we still have to receive them at the gross amounts. So let's do that. We're going to go into the Quick Create. We're going to go to Customers, and we're going to receive payment. Okay, and the first one is for Tony Stark. And the payment date is the date that the factor company tells you they got the payment from the customer. Remember, what we're doing here is not actually receiving a payment. We're giving the customer credit for having paid, which means just record-wise, that really should match up with the date that the factoring company got payment on that invoice. So let's just say it's April 15th. And the deposit to absolutely should be undeposited funds, has to be, because you're going to want to group these payments that they're reporting together in a single deposit. And you'll see how that all comes together. For those of you who understand how undeposited funds work, then this is academic for you. All right, so we're going to check off the invoice for the full amount, again, pretending for a minute like we did get the full amount. Of course, you can put in if they paid by check. Oftentimes, the factor will provide you with that information. And let's go Save and New. Okay, and then Barry Allen pays his. We check it off, the full amount, Save and New. And then Diana Prince pays hers. Check it off. Save and New. So that part, as you can see, goes pretty quickly. Okay, and thank you, QuickBooks. That's funny. They're trying to, in a sample company file, trying to get me to sign up for their online payment service. QuickBooks Payments actually works great, by the way. I actually do highly recommend it. I do use it myself. All right, so now we've gotten paid, right? And this is backdated, so it's not going to reflect that. But if I update this to April 15th, the date we got paid, and I run this, we should see that those invoices now come off the error aging. We're left with the 3 who still haven't paid, right? So that part works. Now we need to finish recording the transaction, though. Like I said, we've given the clients credit for having paid the full amount of their invoice, but that's not the amount we're getting, right? Assuming that this is being funded to us directly, then the net amount we're getting is this $21,26.89. So we need to record a deposit now that takes these gross invoice amounts, then shows that we've now paid off the loan that they had made to us, right? And then take the fee into account, right? And then there's the net payout, right? And so this part is where it gets a little tricky. So, again, plan on pausing and resuming. And if you have a set of transactions like this to record, it's a good idea to just move through it nice and slow the first time. Once you do 1 or 2 of these, it'll start to make sense. It'll start to come together. I can promise you that. Okay, so we've got payment. Now we're going to go record a deposit in QuickBooks Online, bank deposit. And the amounts that we've paid show up here because they're in undeposited funds, right? Let's say that we're depositing it on the same date that they say we got the money. So we're going to just check these amounts off, right? And here we have them obviously itemized by invoice. Not sure why the reference number would be a check number for the payment itself, not for the invoice, right? So we have these amounts, and this is tied into the invoice. So rest assured, later we can go back into this transaction and click one of these and get back to the original invoice so that there's a very nice audit trail on this. So we have the 11/8/16/03, which in fact is the full gross amount of what was paid, right? Now, this is where it can get confusing. I've done this on purpose because a lot of the times the factors will show it this way. Remember that when we originally received the money, we put the gross amounts of the invoices into the loan payable. They will show you the difference between that and the reserve amount, right? So the full combination of these is really what's getting paid out of the reserve, okay? So that's what we need to make sure that we're showing on this. So the way we recorded it was at the gross amounts. The way we need to show the loan payoff needs to also be at the gross amounts. So we're going to put factor loan payable. And again, you can, and I highly recommend itemizing it in the interest of time. I'm not going to. Okay, so the factor loan payable is going to be minus the full amount, right? Now that already zeroes out. But now they have to give us back the reserve, right? I don't know why I didn't total that. So they have to give us the reserve amount, which would be $2363.21, except that now they charge us the fee, right? So full amount of the invoice comes back out of the loan. Now let's go to, where's that reserve account? Factor reserve account. They're going to give us the money that they had originally withheld, $2363.21. Okay, so then that's the net amount now. Don't get confused by this. This is only subtotaling this section here, right? It's down here where you're going to see the true total. And now we have the factor fee, which is an expense account, right? So if we haven't added it already, we're going to add it here if this is the first time we're recording this. And this is going to be an expense. And you could, for the detail type, classify this as bank charges. The detail type is not that important, actually. It was originally meant for tax line mapping, and my understanding now is that it's not even used for that anymore. So let's hit save and close. We've now got the expense account for the factor fee. Oops, there it is. Okay, and this is going to come out of here. The fees $236.32. That's negative. It's money being taken away from us, right? So this should cause the transaction to be the right net amount, $2126.89, $2126.89. Now again, this should match the amount that came into your bank account. Should also match the amount right here. This is my sort of spreadsheet-based replica of what their report should look like, essentially, right? And again, if they don't give you a report that lets you pull this information out of it, then call them and make them give you the report. It should be easy enough for them to spell it out. Here are the invoices that were paid. Here's what we took out for the fees. Here was the reserve amount, and so on and so forth. So, and I wanted to make it real clear because, we record the loan amount as the gross amount of the invoices because that's what ultimately the factor needs to get paid. You could do it at the net. Whole different video on another day, or I've gone over that in one-on-ones with people because they wanted this part to be a little more straightforward. But I did this on purpose because this is what a lot of you are going to see when you get the report back from the factor, right? The advance plus the reserve equals the gross amount. The bottom line is, as long as you have all three pieces of information, then you'll have no problem recording this transaction, okay? So we've got the information all laid out. So the only other scenario on this is, as I was mentioning earlier, they don't actually give you this amount. They will throw this amount into the reserve, and then they'll take another amount out of the reserve, whatever it takes to get that reserve balance in sort of compliance with whatever their required ratio is. And that amount is just going to be a deposit into your bank account, and at that point you take it out of the reserve. So that's really almost just like a transfer. So let's say that that is in fact what happened here. Because at this point, if that's not what happened, like I said, you're simply just going to hit save and close here and save the deposit. But let's say that's how your factor does it. Let's cover the most complicated potential scenario here. Then you need to zero out this deposit at this point. Really easy to do. We're going to put that amount. Actually, what's going to happen is there's two ways to do it. I like laying it out like this because you kind of have all of the details. And essentially then we put this net amount, 2689, back into the factor reserve. So minus 212689. And it's minus because it's money we theoretically were due that we're not receiving. So it's like it's being taken away from us. But it's really going back into that reserve account. And I'm going to show you that next. So let's hit save and close. Okay, nothing changed here on accounts receivable. Right, it backed up to my original date of March 1. If I go back to, let's run this as of today now. Just click in there and hit a T if you ever just want to get today's date. Run that. And you'll see now it just shows the 3 invoices that have not yet been paid. But let's run the balance sheet. I want you to see what this looks like now, and I want you to see how to kind of audit this stuff. The only thing that's on the P&L out of all this is the factor fee, and I'm sure that's pretty straightforward. So if I look at this, here's my factor reserve account. It's got $57.83.10 in it. Why? Because we took that factor amount that we would have gotten in the net check and we added it back in here, right? So $60.19.42 came in from the original transaction, right? That's here. Then we got the settlement. And the 23.26.21 in theory came out, but then after the fees we put the difference back in, right? So that's the 63.21 coming out. It's all on the same day, so it sorts it by amount. And this is the 21.26.89 that we effectively put right back in. So that net it comes to 57.83.10. So if at this point the factor said, hey, you know what? Let's go back to what's left on the report on the receivables, right? What we have left would be, I'm just going to keep it simple here, the total of these guys, which means they want 20% of that on account, right? So let's say the amount that they want to keep in the reserve is 2514.46, right? That's what they're going to want to compare this number with. So 57.83.10, right? But they'll give you back the difference. And if you're not following this, don't worry too much about this. It's just to give you an idea of how they kind of do things in a lot of cases. Not every case, but in a lot of cases. They just want to maintain a certain ratio. So these 3 invoices are still unpaid. Totals $12,572.31. They want to keep 20% of that in that reserve account at all times, and that comes out to $2514.46. After that settlement, our total reserve is $57.83.10. The difference is what they'll release to you. So this would be one of those cases where they're going to give you more money than what you would do just from the settlement alone, because with what remains on account, they don't need to keep they don't need to keep the whole difference after this, right? So now let's record that last piece. Basically, we just need to record the net amount that they're going to give you as a deposit, and it's going to go against the reserve account. So again, we're going to record a deposit. This transaction is real easy to do. Right, so again, we'll assume it's on 4/15. This is going to be from the reserve account. Okay, the amount, $3268.64. Let's record it like 2 days later, just so that on the report it shows up nice and clean and separate, right? And this will be just a release, right, or a reserve release. This is what they'll do. And so save and close that. And there's the reserve release. So now we're back at the 2514.46, which is what and again, in my example, I'm calculating that they want to keep on account. And so that's how that's going to work. So now your reserve account, again, 2 days later, shows the release, and those are the funds that would have actually come into your account as a result of the April 15th settlement that happened, right? So the settlement happened. The net amount of that settlement was actually only, where did it go? $21,26.89. Add that back into the reserve, compare the reserve with the minimum requirement, and then release the difference. A lot of factors will do it that way. That adds sort of a layer of complexity, as you saw, but the transaction itself, as you just saw, really, really easy to record. So let's go back to our balance sheet. And then the other account we want to look at is the loan payable account, right? So the factor loan payable, let's make sure we're clear on what date we're looking at here. Okay, so originally when we sold the invoices, we owed them $30,097.09, right? Remember, that was the original amount that we sold them, that they funded us on. Of course, they only gave us the difference after the reserve on that. But we owed them $30,097.09. In theory, if our customers didn't pay, we would either owe them that money or they would force us to buy those invoices back. One way or the other, we would have to settle with them for that amount. Then on April 15th, the settlement came in. This is the 11/8/16/03, right, that we received on the settlement, which is here. These were the invoices that were paid, 11/8/16/03. Another reason I like to record this based on the gross amount, the audit trail is nice and clean. I had these in the total invoice amounts, and then this is what was received on April 15th. So now the amount due to them is the 18,281.06. And again, in case you're confused, and I'm sorry if I've confused you, the difference would be some people will just record the actual advance amount as the loan payable. But I don't think that's the best way to do it. I'm not going to say it's not the right way. There's no right or wrong here as long as you get to the right net amount and as long as you can get your reports that are, to agree to the factors. And of course, as long as the information ultimately is actually right. What did you borrow from them? What did you pay them back? What did it cost you, right? That's the important thing at the end of the day. But the other way to do it would be to just record the net advance amount as the loan payable, and of course the difference in the reserve. I just think this is cleaner. It's more detailed, and the evidence of that, I think, is right here, right? Because we can see everything that came in that we sold them and everything that came out, everything that got paid at the full gross amount of those invoices. That, my friends, is a half an hour free video tutorial on factoring receivables in QuickBooks Online. How to record it. Like I said, lots of improvement in the way the factoring companies are reporting on this. I've run across a few companies in particular that have I've seen firsthand where I would agree they have great reports. So if you're interested in finding out more, just reach out to me and I'll be happy to share names of companies with you. I just didn't want to do it on YouTube, mentioning other companies' names and things. So just reach out to me. I'll let you know what companies I've had good experiences with. Happy to do it. Happy to help you get in touch with a factor that will best serve you in terms of getting the funding that you need and ultimately being able to record the activity nice and clean in QuickBooks Online. As always, I hope you had some fun here, learned something along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.